Good evening, guys. So, as I have promised that I'm going to explain about Pitchfork, this is the video. This is not going to be a big video. Okay, I'm not going to take much of your times unless it is, it is very necessary to explain. And while explaining about tools, I don't think so. More than 5 to 7 minutes of video is, much more appropriate to do so. So now how to draw a pitchfork. A pitchfork needs 3 points, point A, point B, and a point C. And for that, I'm using the swing highs and lows. And on a 1 hour time frame, this is Bank Nifty futures that I have chosen to draw this pitchfork. And now we will use pitchfork on we will see how I use Pitchfork. For that, first I have chosen a low point and then a high point and then a low point. And you can see here, this is original Pitchfork and it doesn't do much of work here. So we will change the style of the Pitchfork. Now, you can clearly see the pitchfork here that it is given some levels. So these are the levels that you can't find. Okay, these are the levels that you can't find right away. You need to have higher highs and lower lows on a swing highs and swing lows before drawing a pitchfork. So I assume that I have drawn a pitchfork at this point, or normally what I do is fractal bars. Once when I see the fractal bar, I chose to draw a pitchfork. I always choose like that. So I want you to choose until you see a nice swing high and a swing low. Then you can draw the line, pitchfork. So now the pitchfork is here. How can you say that at this point the market will, fall and at this point the market will raise? So I'm not going to go for higher levels. I have like two maximum, three if you want. You can see accuracy. So initially I'll explain about just deviation one and point five. So now here you can see this is a 15-minute chart now. So from here we have drawn a pitchfork at this level. And how do you identify this area as your reversal area? Because yes, pitchfork has deviation going zero point 0.5. So can we be so sure that it might come down from there? Yes, I'll tell you how. So now this is the area where the market is reversing. This particular area you can choose this particular area to this particular area as a, sorry, give me a second, this particular area to this particular area. We will draw a rectangle from here to this area. If you notice, yes, that is one resistance zone. Okay, that's like two confluence areas right now: a resistance zone, support and resistance zone, normal support and resistance zone, and then a pitchfork resistance zone. And now what shall we use? Oh, we'll do one thing. This is not my, this one is the one that we're supposed to choose. Give me a second, let me see the accuracy. Yeah, okay, yeah, it is good. And now we will we will draw a Fibonacci to extinction to identify the possible reversal zones. So where shall we draw this? We shall draw at the same level like this. We can draw extinction. If you want, most of the people draw extinctions like this, from point to point extinction. This is really bothering me. Give me a second. Okay, yeah. So now this is absolute 0.618 level, which will be considered as a confluence. This area, and your target is, first target is this one, and second target is this one. As simple as it is. So now there is another way of drawing, uh, you know, Fibonacci extinction. So this is the impulse move. So What we'll do is we will choose the first impulse move instead of choosing the same level of, you know, this is the impulse move for Fibonacci. So now look at the accuracy, absolute one level. And now look at the bottom, 0.382. You can exit here, right here you can exit, and here you can exit. And this is another confluence area where it closed below, and absolute median level acting as resistance with the same levels, but not that much of a confluence. I could say that this is a shakeout, like it, fake breakout, and then it came down to the same point of your extension levels, or you can even say the deviation of 2 and 3. You can choose. Yeah, there you go. This is where you'll exit because this is too far and you're not sure. And this area here is acting as resistance, I mean support previously. So you'll choose this area. So that is how you need to choose. So there are three confluence, three possible confluences. One, the support and resistance zone. Two, the pitchfork, deviation and medians. And third one is Fibonacci extension. So this is how you can choose. You can select the areas of confluence and trade with ease without fearing about your what do you call it about your finances or your trades. So now this is my setup for the past few days. Since this point checked out, I have drawn this one when the price is at this level on 24th of August, and it's still working like miracle. And you guys have already seen this move, and you guys have already seen this move, and this move, and this move. So this is a confluence area here. You can see that from my setup. This is a confluence area. This is a confluence area. This is a confluence area, and this is a confluence area, big confluence area. And accordingly, there are many, but you need to work on your own to identify the levels. That's when you'll have confidence. Most of the reason why the traders lose is because they take this advice from someone else. Someone else is doing the analysis. So when someone else is doing the analysis, you can't trust. I know that you might say whatever you can say, that yes, I trust him, I'll take whatever. Some people can, they'll simply bet their money, hard-earned money, on someone else's analysis. But some people can't, and those are the people who lose most. They can't trust someone else's analysis, so they can't stick to the trade from here to here. All this move, if you're the one who's trading, I'm pretty much sure once at this area, the confluence area, once when you saw this you know this bullish engulfing candle here at this level, I'm pretty much sure you would have taken a call to this level. And once you saw a breakout and a retest of this level, you know that from this point, Fibonacci, to this is the target, and obviously it is going to move. And this median level is the one that might act as resistance along with this Fibonacci extension. So if this analysis is your own, I'm pretty much sure you would have earned. But this analysis is not yours, it is someone else. In the same way, you need to have your own analysis and you need to trust in it. And that's when you can get into a trade. Until then, keep working and stop taking tips. Learn. Thank you, guys.